Just about Christmas time, and it's one of the greatest times of year, but it's also the most expensive time of year, and it's very stressful for a lot of people. And you're getting excited about Christmas, but money is tight, and so you get excited because you worked all year, you slaved away for your company, and you're like, yes, I'm gonna get this huge Christmas bonus. OMG, I'm so excited. So you grab a scotch and you get all pumped up, and then you open up the envelope and you see your bonus, and then you see how much tax you paid, and you're like, what the hell, like that was way more tax than I expected to pay. And how come your Christmas bonus is taxed way more than the rest of your income? And today I'm going to explain exactly why. And the first thing you need to understand is that taxes are very complicated in Canada. Well, this part of them isn't, but they're also really misunderstood. So let's talk about how you're taxed on your income, and then you'll understand. And today, for my viewers, I'm going to use 2018 combined federal and provincial tax rates for Alberta that are rounded up to the nearest $1,000 or down, so that it makes our math easier and the numbers are just easier to figure out. Every province has different tax brackets because provincial governments set them differently. But in Alberta, this is what we're going to use today. If you make $0 to $12,000 in Alberta, you pay 0% tax on that first $12,000 that you make, and then between $12,000 and $19,000 you pay 15% tax on that chunk in between $12,000 and $19,000. From $19,000 to $47,000 you pay 25% tax on that chunk in between 19 and 47. From 47 to 93, you pay 30.5% tax. From 93 to 128, you pay 36% tax. Now you're getting up into the higher tax rates. 128,000 to 144, you pay 38% tax. 144 to 154, you pay 41% tax. So on that $10,000 chunk, you pay $4,100 in tax, or 41% on just that chunk. You keep going, 154 to 205,000, you pay 42% tax. Then there's a weird $1,000 tax bracket. From 205 to 206, you pay 43% on that 1,000 bucks. 206 to 208, you pay 48%. No, 308. I'm sorry, 206 to 308, you pay 48%. And anything that you make over 308,000, you pay 49% tax on that in Alberta. So now let's get back to your bonus. And for my example today, I'm going to talk about somebody that made $93,000 as a salary, and they're going to get a $10,000 bonus at the end of the year. So their company knows that they're going to be making $93,000 that year, so they're going to tax them off of their checks based on that income. So the first $12,000 you make, you pay 0% tax on that. And then between $12,000 and $19,000, you're paying $1,050 in tax on that $7,000 chunk, because the tax rate there is 15%. Now from $19,000 to $47,000, you're paying 25% tax. So that adds up to $7,000 worth of tax on that chunk. And then from 47 to 93, you're paying $14,030 in tax on that chunk, because that chunk is taxed at 30.5%. When you add all of that up, it's $22,080 that you've paid in tax on the first $93,000 of money that you made in the year, which averages out to 23.7%. So your average tax rate is 23.7%. So that's what they're peeling off your checks, because they knew that's how much you were making. But now you get a $10,000 bonus on top of $93,000. So now your income is $103,000, and they have to pull off the top tax bracket now, which now you're falling into the 36% tax bracket. So you're taxed $3,600 off of your $10,000 bonus, left with $6,400. So I hope that starts to make sense. Tax brackets are really important to understand, to sort of get your mind around financial planning. It's one of the first things you need to understand, and that is why your Christmas bonus was taxed so much. But still a nice chunk of money. Merry Christmas to everybody, or Happy Holidays, or whatever. Thank you very much for watching, and we'll see you either in the new year or near Christmas. Thank you.